In this video, we will talk about when we should ignore the financial advisors and pay off our mortgages. In a previous video, and also the mainstay of financial advisors, they tell us we don't need to, but here we talk about why and when we should. Hi, I'm Fifi, your mum, engineer and consultant in London, and I make videos about saving money, investing and understanding the economy to make better financial decisions. Time and time again, and in my own family and friends, we see our homes being used as a cash cow. The leveraged returns are a beautiful thing for an investor, and homes have been a great provider of this to homeowners. However, the temptation to refinance and extract equity as cash to then pay for extensions, holidays, cars is omnipresent, and few people are in their homes the entire term to even pay off the mortgage anyway. Now, universally, we can agree that holding high interest rates is pretty daft. Credit cards, consumer loans and store credit come into this category, making total sense. Likewise, in the UK, not contributing to your pension and matching employer contributions and tax efficiencies is again silly. However, once you're out of debt and have a nice strategy for retirement investing, there is conception that rather than paying down mortgage debt, we should put every dime into investing. The argument being that mortgage financing is cheap, and with a stock and bond portfolio, we can generate 2 to 4 times on money paid towards the mortgage versus investing. Now, what I do want to talk about is the contra argument, which is after you've paid off your debt, have a plan for retirement, then pay that debt down. If you can do it in say 20, 15, 10 or 5 years, then do it. But the question is why? Well, the arguments are more than pure financial ones. Firstly, it's the most important asset you own. We all need a place to live and always will. Money invested can be volatile, and if you pay off your home, you have no worries about putting a roof over your head, right? There is a lot to be said about providing comfort, peace, happiness, security, and all of those good things. Imagine raising a family in a home you have no mortgage on. You're not overly concerned that the largest expense is now off the table. No one is able to kick you out unless your spouse screws up, then he be gone. By the by, paying down that mortgage is the best risk-free return on the market. Interest, say on cash savings, are abysmal. They literally make 1 to 2% at the moment, and that is if you're lucky, and that takes a lifetime to double. Now, the stock market is a great source of long-term returns as well, but if you don't have the stomach for the volatility, and let's face it, right now you do need guts of steel out there, then the mortgage rate is higher than cash rates and can multiply your return with no added risk. I hope that makes sense. Instead of receiving rubbish interest, you now no longer pay interest at a higher rate, and it's why banks will let you offset taking that spread for themselves. It's all a tricky business, but they are out there to make the money. Don't let them do it, guys. And if a bank offers you something, it's because they can make money on it. So make money for yourself instead. Right, the second thing I'm going to talk about is staggering government debt levels. So those government debt levels were high in the past, but now it is super crazy. So in the UK now, we have debt levels that are higher than GDP, and it will only continue to rise. So with debt as high as it is, it has to be paid for somehow. I do want to point out the short term of politics will end, and the only certainty in that instance is taxes. We should expect tax incidents to rise on asset owners, and not only that, we should expect tax rates to rise all around. Tax incidence itself is who pays the tax, and tax rates is how much of your income you pay to tax. Guys, the thing with property taxes, stamp, council tax, tax on fuels, etc., all of these things need to be paid regardless of whether you own your property fully or not. So by paying off your home, you lessen the burden and how much you need to pay to live in your home. And another bonus is that your nest egg is still there. Now, if you resist the urge to withdraw equity, the capital is still there in the bricks and mortar. Ouch! Ouch! Oh, I just banged my wrist on the corner of my wooden chair, and it was that point where the pain travels all the way up your arm. Oh, like I was saying, your nest egg is always going to be there. If you resist the urge to withdraw that equity, the capital is always going to be in that bricks and mortar. And that is just stating the obvious. I'm still feeling that. Having said that, ouch, if you do need that equity for whatever reason and your loan to value, LTV, is fairly liquid, then you can have that cash out in something like 1 to 4 months. But let's face it, the idea is not to actually borrow more on your home, but you have that optionality should you need it. And having that reassurance or that safety blanket might keep you warm at night. The next thing I want to point out is house prices can drop. Rising house prices are not always a certainty. House prices can rise and fall in line with supply and demand, like with all things good. In the great financial crisis, if you remember, of 2007-8, homeowners actually lost large chunks of equity, just gone like that. And we also had very high loan-to-value mortgages, and the result was your home is worth way less than your mortgage was actually. Having a house fully paid off allows you to ride out those downturns. So if you lose your job, you're not scrambling to find a job to pay for an asset that is worth less than the mortgage, if you know what I mean. If you are able to keep your job, you now have the optimum entry point to continue to buy assets at distressed prices at that point, where the actual wealth is made. I do have a video which looks at why you shouldn't pay off your mortgage and invest instead. The decision there is mostly driven by the economics, and the main point is you don't have to feel guilty about which side you land on. It's better to sprinkle the facts and understand those facts and know it all, and then make an informed decision. But here it is in case you fancy a nosy. Which band camp are you on? Pay off or don't pay off? Let me know your thoughts down there below. Until next time, cheers guys.